What's up, guys? I'm your host, Tim Galligan. Welcome to the Ghost of Real Estate. Today we have special guest Stephan Dellibovi from Forest Hills Financial Group. Steve, welcome to the show.
Thank you so much for having me.
Yeah, thanks for coming, man.
How could I pass this up?
Cool. So, get started. You want to tell us a little bit about what you do at Forest Hills Financial?
Absolutely. So I'm a managing associate with Forest Hills Financial Group. We specialize in all your protection vehicles, life insurance, disability insurance, long-term care insurance. We do have some group health services as well, but that whole kind of marketplace has changed, as maybe we'll touch on at some point today.
Cool. So from a life insurance perspective, I feel like it's broad, right? Like, you know, what's the average age of people that are getting life insurance? What different types of vehicle for life insurance are there? How would you break that down? What would you recommend?
Sure, that's a great question. I think sometimes when you bring up the term life insurance, right, some people like close their eyes and run away. Some people roll their eyes like they've had these experiences or they've heard these things from different people. I think you really, when we're talking about life insurance, we have to just take a step back and remember what we're trying to do, right? We're trying to make sure that we properly protect ourselves in the event that, God forbid, we die too soon. Right? So we want to make sure that our family or our business or our investments or whatever it might be are going to be protected. So when we think about life insurance, there's two major types. And I'm not going to bore you and get into too many details, I promise. You have term and you have permanent. Right? So this is the Ghost of Real Estate podcast, right? So I'll make a real estate analogy. Term is like renting, right? You have your coverage for a predetermined length of time. As long as you pay your premiums, you have your coverage. Permanent insurance, it's like owning a home.
Right. Okay.
There's some equity that builds up. It lasts forever, or until in theory you get rid of it or you just sell it. But at the end of the day, regardless of the type of insurance, what I always tell people is my obligation to you when engaging with somebody, and what I think the person's responsibility is to make sure that they get the proper amount of insurance in place first.
Okay.
Putting type secondary.
Cool. So I have term insurance. So for example, if my wife kills me, she gets X amount of dollars, right?
So that's funny you use that analogy. There's actually a caveat. If she kills you, I don't know that they'd actually pay the death benefit to her because she's a felon, but we'd have to look into the fine print of your policy. But yes, it is that simple. If God forbid, you know, your time here was up, there's a $2 million check being written to whatever beneficiaries you determined, and that is a tax-free check. So it's a really powerful check.
Okay, and it's tax-free?
Yep.
Wow, okay. So she would, or whoever is beneficiary would get that check. She is, so she would get that check.
Correct.
Now, whole life insurance, I guess before we even get into the different types, like I said, the number is most important. So how would you determine what the appropriate number of coverage is for someone? Great
question. I wish that more people asked that. People don't realize it, but we, the insurance companies, the actuaries, we actually have a human life value or a human economic replacement value.
Okay.
What do I mean by that? Let's say, God forbid, on my way here today, so it didn't happen because I got here safely, stepped off the curb the wrong way, bus came by, it was my last day here.
Right.
My wife's probably going to call an attorney firm and say, hey, this is what happened, and the firm's going to file suit against the county, against whoever the bus operator was, the bus driver, and that law firm is actually going to do a calculation based on my age and my income to determine what my earning potential would have been. Believe it or not, what people don't realize is life insurance carriers do essentially the same thing.
Really? Wow.
Yep. So you might have, right? So you might have heard somebody say, oh, I have too much life insurance, or I'm overinsured. I always chuckle at that because really what happened is, in my industry, I feel like, that we do a really poor job educating people, right? So I'll give you an example. If you bought a new home tomorrow, $800,000 home, when you call your insurance broker, you're not gonna say, hey, can I insure my home for $650,000? You're gonna say, hey, how much can I insure my home for? For some reason, life insurance is this only vehicle that I've found in that insurance world where people wanna get this minimum or like some number that they've come up with in their head. They never actually ask, hey, Stephen, what am I eligible for? What am I allowed to have?
Right.
What is my replacement value? So it's actually a multiple of your income depending on how old you are. So Tim, I happen to know your age, you're sub 40, wink, wink. So you're actually eligible for 30 times your income.
30 times income?
Yes.
Okay, and there's a limit or a cap on it?
Yeah, so if you said, Stephen, I want $50 million of life insurance, I'd say, great, you know, did you make $2 million, whatever that number is last year? And you say, no, I made 300,000. I'd say, well, that's really nice, but you can only have 9 million.
Really? Wow, why is that?
Well, very simply.
Like, how does that affect what the insurance company pays out?
Well, think about it from a not so good perspective. If people could get these unlimited amounts of insurance, you'd have the amount of insurance fraud through the roof, right? If you could insure yourself for $100 million, live past the suicide clause, God forbid, leave the next 10 generations multi-millionaires.
Right.
So the point of insurance, any kind of insurance, is not to get wealthy or to take advantage of the insurance company. It's to be made whole.
Right.
So if something happened to you, the way the insurance company looks at it is we're going to make sure Tim and his beautiful family are made whole financially.
Understood.
They're not in a better situation than if he was still here.
Right.
Does that make sense?
Yeah, not how I thought about it at all.
Sure. Nobody does, right?
Yeah.
And we all think about it as consumers.
Right.
What's the cost? What's the premium? What does this do for me?
Right.
We don't think about it as, hey, listen, we're here to achieve a goal. We're here to replace income.
Right.
Right? My income has stopped. And not for a short period of time.
Forever.
Endless.
Right.
It's gone.
Yeah, that's interesting. Got it. So that would make sense of the rule and regulation of the caps.
For sure.
So getting into different types.
Sure.
All right. So you got term, which is very simple. I could take a term. That's the term. When that point comes, if I'm still alive, everything I paid is a waste.
Okay. I don't like the term waste, but yes, it's gone. Well, but you had insurance. You were paying for the cost of insurance.
Right.
So
But
it
I
was
got
wasted.
I got no benefit from it. I didn't have to use it.
No
Thankfully.
living benefit. Yes.
Right, no living
Like
benefit.
car insurance.
Right. Okay. Exactly. Okay.
Or homeowners or anything else. If you don't have a claim,
Right.
you just
It
paid
was
your
just
premiums
waste.
and you were
Right.
covered.
Okay. So now you got whole. So
Okay.
now I don't know. I don't know anything about this. I'm saying the
Sure.
whole is like, oh well, it's an investment vehicle. You can borrow up against it. You can do this. You can do that. What's the truth behind whole life insurance?
Sure, sure. So another very controversial topic for some
Sure.
reason. You know, what I always tell people is if you go to Google and type in something, you're going to get 50 positives, 50 negatives. So
Right.
it has to be done on a person-by-person basis. But
Sure.
conceptually, and I'll make sure we never use the term investment again, it's not an investment.
Okay.
Okay? There is a cash value or an equity component to the policy because if you work with, let's say, so there's two major types of insurance companies. Let's take a step back. There's what's called a mutual carrier, and then there's your publicly traded companies where you can go buy their stock, right? So the difference between a mutual carrier is, for example, let's use a big name, New York Life, right?
Okay.
Everybody's heard of New York Life or Northwestern Mutual or Guardian or Mass Mutual. Those are the four major mutuals. I can't buy stock in New York Life, right? I can't call my broker and say, hey, I want to buy 50 shares of New York Life. It's not an option.
Right.
In order to be an owner of that company, you have to have a policy with them. That makes you a policyholder, makes you an owner, if you will, of that mutual carrier. On the flip side, right, you have companies that have demutualized or gone public. Let's say like Prudential, where you can buy stock in that company.
Right.
Okay. So typically, the best performing whole life products are from a mutual carrier because they don't have shareholders to make their numbers look good. Right. At the end of the year, if New York Life is profitable, they pay what's called a dividend.
Understood.
Okay. The dividend is going to go to the policyholders first because they don't care, quote unquote, how their stock looks because they don't have a stock.
Right.
Okay. So when we're talking about permanent or whole life insurance, there's a couple big components that people like. Number one, the coverage is supposed to last forever. It's whole life. Right? It's supposed to be there for your whole life.
Right.
Number two, the death benefit, as long as you pay your premiums and do what you're supposed to be doing, is guaranteed. There is a cash value or savings component that I think people sometimes confuse with an investment that is also guaranteed. Now, obviously, based on the performance of the company, they can pay a dividend that's above the guaranteed, but we're kind of getting into the weeds there. The premiums are also fixed level and guaranteed. Okay, so that's three really, really big components. Your premium's guaranteed, your cash value's guaranteed, and your death benefit's guaranteed. That's really, really important things that people want to keep in mind, and they like that.
So your cash value is what you're growing from the dividends paid from the company.
Yes, so cash value is the growth inside the policy.
Got it.
We sometimes refer to it as like a living benefit.
Right.
Right, it's the cash inside the policy that you have access to while still alive.
So, just from the again, I don't know what I'm talking about from the outside looking in. Now, when I'm going in, I'm getting a whole life insurance policy. I'm either you said Mass Mutual was the company.
Mutual company, yeah. New York Life has them. Mass Mutual,
Okay,
Guardian.
So let's stick to Guardian and Mass Mutual, right?
Sure.
So it's only with my policy is only going to be with one of them.
Yes, you're going to get a policy. You're going to get underwritten and insured by one of the carriers.
So I'm betting on that company and their performance for dividend payout.
Sure. Yes. Now, those four that we happen to have named have all been around 150 plus years. They've all never missed a year of dividend.
So is there a company that would make up a mutual fund of mutual companies, meaning like a piece of each one to protect you if one goes belly up?
Sure. So the short answer is no.
Okay.
You can't invest in these companies.
Right.
These are privately held companies
Right.
that do their own money managers and have been around 150 plus years and are AAA rated and AA rated and all that fun stuff. Each company obviously a little different on the rating side. But in the situation where you are worried about the financial strength of one of these companies,
Right.
that's those one-off conversations that you have with your representative or your advisor to talk about, hey, listen, why do we utilize this company?
Right.
Why is why is Guardian AA plus rated? Why is Mass Mutual AA plus or AAA plus rated? Like, why did they get these ratings? What does this mean?
Right.
Like, how strong are these companies?
Right. Yeah, that'd be important to know, right?
But it's, yeah, absolutely. But it speaks to a bigger point. We don't want this to be confused as an investment, right? The reality is we never want to lose sight of the fact that this is still insurance first. And I think sometimes when people lose sight of that, they start having these questions like, well, what if it doesn't do well? Or what if this happens? If one of these major mutual carriers didn't pay a dividend, that would be, tremendous. It's never happened amongst those four through the Great Depression, through the World Wars. So that really does say something. But on an individual basis, you want to sit down and really have a conversation around which carrier is right for you.
Right.
Which features do you like? Underwriting wise, if there's any medical underlying concerns, do certain companies look at certain things differently? Maybe. So those are the one-off conversations that you want to have.
Cool. All right, understood. I get it. So
Hopefully
now,
a little bit more.
Yeah, no, definitely. Definitely.
Okay.
Now, what is universal?
Great. So there's a couple different types of universal life, but what I can tell you is the highest level is it's almost like a combination of term and permanent.
Okay.
Okay? There are some features to it that act like permanent insurance, and there are some features to it that act like term insurance. Depending on the carrier, depending on the specific type of universal life insurance, there are some caveats there. But it is intended to outlast term insurance, but it does not have the guarantees necessarily of traditional whole life insurance. So it's really like this hybrid product, for lack of a better term.
Cool. All right. Now, disability.
Sure. I'm glad you bring that up.
Tell me about it.
Sure. So disability insurance has to be, in my estimation, one of the biggest holes that we see in people's planning.
Okay.
Disability insurance is essentially paycheck protection. Right? You're insuring your ability to work. So why is it so detrimental, or why is it so impactful to people? Well, life insurance, you're not here to see what that benefit does.
Correct.
Right? But if you're disabled, if you're unable to work, you're here watching the deterioration, or what could be the deterioration of your own financial situation, along with that of your family's. Right? So I think emotionally, mentally,
Yeah, you can't do that.
yeah, it's debilitating.
Right.
Right? And people think disability. I think oftentimes people, when I bring this concept up to people, they're like, well, I don't ski, or I don't skydive. They think it has to. Yeah. Most disability claims right now, I believe statistically on average, are related to mental nervous, anxiety, depression. Right? So you're out of work not just because you broke your leg or your back, because mentally you don't have the capacity at that time to work.
Right.
I think the statistics right now, don't quote me on this, is somewhere around 1 in 4 working millennials will at some point be out of work for a prolonged period of time due to a disability. Doesn't mean they won't return.
Right.
But they will have done that. So think about that. There's a couple of us in this room. Statistically, one of us might have an issue where we need to, or would be out on disability.
Got it. Yeah, I would think that's important. I don't even know anything about it, and that's great that that we're talking about it. So, as a real estate agent, now most of the time when you let's say you're a W-2 employee or you're working for a company, that will be given to you through your paycheck, correct?
It can be, sure. A lot of employers do that, absolutely.
So now for someone who doesn't have that, you would want to get that for yourself too. So let's say, because I can never work again.
Got it.
Right? I can just never
You're
work
completely
again. I
disabled.
can't
Got
do
it.
what I'm doing
Sure.
and work again because I don't have legs or an arm or, God forbid, something to that extent.
Got it.
Do I get compensated for the rest of my life?
Great question. So a couple of things I want to unpack there. First of all, even when people have coverage through work, group coverage, depending on what you do, depending on your income, might not be enough. Okay, it might also be provided to you at no cost, meaning that
Right.
your company is paying the premiums, which, not to get too technical and granular, might make the benefit taxable. Whereas if you have something private and you use money that was already taxed, you're going to get that benefit tax-free.
Got it.
So even if you work for a company, it's a conversation to have, number one. Number two, it is based upon your occupation, your income, and obviously age and health, like any other insurance that we've discussed today. So we want to make sure that the type of contract that you have, right, because at the end of the day, an insurance policy is a legal contract, right? We want to make sure that your contract matches what you do. So you said, can I get paid for the rest of my life? So they don't have lifetime contracts for the most part anymore, but they have them till age 65, age 67, age 70. So depending on when, obviously, this traumatic injury happened, you could receive claim for 30 years, 20 years, 25 years, depending on how your specific policy is designed.
Okay, and is it a portion of what you make? Is it what you make per year? Is it a blended average of the past 3 years of earnings? How does that work?
Great question. So it really depends on income and the type of job and the way you're compensated. So they might utilize your previous 3 years of income in underwriting to determine the insurable amount. But no, you're never going to get 100% dollar for dollar. But remember, right, like we talked about on how much you're eligible for in life insurance, if you got a dollar for dollar match on your disability insurance, nobody would ever be motivated to go back to work, right? So the insurance companies, they have to, there has to be, they won't say this out loud, right, but there has to be some motivation for Tim to go back to work, right? If Tim can sit home making the same exact amount of money he made working 60, 70 hours a week.
I might chop my own leg.
Exactly. Don't tell anybody that, right? But the reality is, so you can get somewhere between 75 and 80% of your income covered, depending on, again, what you do, your occupation class. So you get a good chunk of it covered for quite a while. And again, this is, people don't realize how impactful this is. That might be the difference between you still being able to retire at 65 or 70.
No, for sure, yeah. No,
Pay your bills, stay in your home.
Yeah. And what percentage did you say of it?
Somewhere between 75 and 80%.
Oh, okay.
It's a good chunk. And if it's a tax-free benefit,
Right.
it really almost is that dollar for dollar replacement, right? If you're getting, depending on your tax bracket, I'm not an accountant, right? It could be pretty close to what your take-home pay was.
Right. Now, are there different types of disability insurance?
Great question. So,
Of course, right?
you're on fire today, Tim. It's like I gave him the questions or something. No. Yes, so disability insurance, go back to what I said earlier, how it's a contract.
Right.
There's different definitions of what's considered disabled. So depending on how highly specified, what you do for a living is, how much training did you need for that? How individualized is it? Is it something that, like, you probably could do from home as long as you had your computer and the ability to talk on the phone? Or do you need to be in the field? Like, could you maintain your income if you could never do an open house again? Could you maintain your income if you could never go to a closing table, but you could sit in front of a computer and post a listing, right? So understanding what the definition of disability is, and we try to match that up with somebody's education, somebody's job title, and what their role is, because we never want to be in a situation where they have very generic language and they get a call from the insurance company a year or two later that says something like, "Hey Tim, how are you? It's Stephan Dellibovi from blah 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 insurance company. Can you sew a button on a shirt?" And you're like, I don't know. No, not can you, like physically can you? And you're like, "Oh, I definitely could." Great, Tim, do us a favor. Go to the nearest dry cleaner, get a job. We're going to offset your benefit.
Yeah.
Right now, obviously, I just made that entire story up. I'm not saying that's ever happened, but something to that effect could happen.
Got it.
If the definition of your policy does not say, "Hey, Tim, if you can't do what you're doing at time of being disabled, you're considered disabled for the duration of your contract."
So who negotiates the contract, or is it not a negotiation?
So it's not a negotiation. You look for the contracts that have the language you want, and that's
Got
when
it.
a professional like us comes in. There's like what's called true own occupation. There's any occupation. So that's our job, to kind of navigate you through those rough waters. But that is probably the most important thing when looking for a disability contract, because that could be the difference between Tim one day, God forbid, having to work at Burger King, and Tim, working from home, receiving his benefit.
No, for sure. No, 100%.
Yeah.
Yeah, no, I think that's very important.
Yeah,
I
and
think
probably
that's-
one other big thing that I didn't mention is, let's say you were a doctor, Tim, and you could no longer see patients for whatever reason, right? You were disabled for whatever the reason is, but you could teach medicine. Do you think you would be considered disabled?
Could teach medicine?
Yeah, like you go be a professor at Penn or Harvard. You can't be a doctor anymore. You can't see patients for whatever the reason is, whatever the diagnostic reason is. Maybe you were a surgeon and you have a tremor in your left hand, so you can't operate ever again. But you could go teach medicine at Penn or wherever. Hofstra, it doesn't matter where.
Yeah, I guess you're not disabled.
Great question, right? So that nuance depends on the language in your contract.
Right.
So highly specialized professionals, we want to make sure that doctor is covered, even if he's working in another occupation.
Right.
Right? So see how important that language becomes?
So you get paid from the occupation plus your disability?
You could.
Right.
If you have the proper contract, right?
Right.
The insurance contract says, "Hey, Mr. Tim, hey, Dr. Tim, you can't operate." Right? He likes that. I called him a doctor. You can't operate, therefore you're disabled.
Right.
And you're like, "Well, just because I can't operate doesn't mean I can't do something else." Well, if you have that language in there that allows you to work somewhere else, good for you.
Right.
Right? Because you went through all that schooling, maybe got some debt from med school or whatever it might be, to get to where you were income-wise.
Right.
You should be made whole.
Right.
But with the wrong contract, they might say, "Hey, listen, you go teach, we're going to offset your benefit."
So would it, could you get if you were getting it from an employer, could you get additional disability insurance?
Great question. So yeah, the answer is yes.
Okay.
You can get a policy outside, and why we always recommend, not always, right, no blanket statements, but why we encourage and why we educate people on why that's important is a couple of reasons. Number one, typically the language in group coverage is very generic. It's not that highly specialized language. So depending on what you do for a living, you might want language that's a little more nuanced, so that if something happens
So when
to
you
you.
say group coverage, you mean group is a company?
Yeah, like so
Got
if
it.
let's say I worked for you and you said, hey everybody, I'm rolling out this group, everybody gets group disability as part of your compensation plan. It's considered a group plan,
Right. Okay.
right?
Got it.
So that language is usually very generic, right? There's no underwriting involved. We all just qualify for it as long as we work for the company for maybe 30 days or whatever the situation is.
Right.
So you want to be aware of that, number one. Number two, you want to be aware of if the company's paying for it, what are the taxable consequences?
Right.
And the last piece is, well, what if you leave the company and the company leaves you? Or you want to go be an entrepreneur?
Right.
If you didn't have private coverage prior, it's a lot now harder to get it. You might go to a company that doesn't have any,
Right.
right? So coverage you get through work is great. It's just like life insurance. Anything that's free, it's for me,
Yeah.
right? Take it, you
Right.
want it, it's great. But understand, having your own policy, that's now yours wherever you go.
So life insurance, when you go to get life insurance, so I have terms, so I've gone through, you got to go for physical, you got to go through the health check, right?
Sure,
Do you need to go through that for disability to make sure that there's no pre-existing condition?
sure, great question. Absolutely.
You do? Mm-hmm. Damn.
So, and what I would say to you, and I tell people this in full transparency, think about disability insurance if you were an insurance company, and think about life insurance,
Right.
right? Life insurance is pretty simple. Tim's either here
Or not.
or he's not. Stephen's either here or he's not. Disability insurance is a lot more complicated. You're saying you can't work, your doctor's saying you can't work, do they now bring in a doctor? Like, for example,
Right.
oftentimes if you've had previous injuries and disability contracts, they might have what's called an exclusion. So myself, I've had operations on my left shoulder twice. I tore my bicep and I tore my labrum, just thinking I was stronger than I was. Years ago, I promise. So for example, if I went through underwriting for disability insurance, it's very likely that say, hey, Stephen, we're going to exclude your left shoulder.
Got it. Okay.
So if something happens to you where you got a disability because of your left shoulder, you're not covered.
Right.
Now you're told this before you accept your policy, before you decide to pay any premiums. And again, that's a conversation that you have to have. But absolutely, you have to be medically underwritten because think about, there's so many more things that could generate a claim for disability than for life insurance. So I would actually argue that the underwriting should be more scrutinized.
Right.
Because the likelihood of a claim is so much higher.
Yeah, no, for sure.
Right? I mean, life insurance, like, not to be morbid, but I either get home tonight or the check gets there in a couple days, right? Like that's really, it's that simple. Where's the death certificate? As long as I wasn't, committing a felony or doing anything crazy, the insurance company's going to pay that claim.
Got it. Okay. So what other types of insurance does Forest Hills offer? Are those your two main?
Those are probably the two, the biggest one that we hear about today, and I'm sure you've had probably some previous guests on talk about long-term care insurance. Mm-hmm. Right? It's a really hot topic these days.
Yeah.
And long-term care insurance is a very interesting marketplace. And those products and the carriers that offer them have changed over the years. But long-term care insurance, I would say, has really become, I feel like every time I turn on the TV, somebody references long-term care insurance because the baby boomers and all that fun stuff. People are living longer.
Right.
And as we live longer, what we're finding out is we get these other ailments. Diseases that maybe, or issues that we didn't have 50, 60 years ago because people weren't living into their 90s. So long-term care insurance is definitely a hot topic right now.
So when should people start buying that?
Great question. I'm not a fan of blanket statements because everybody's situation is unique.
Sure.
But,
okay, so let's use me.
Sure.
34 years old.
Sure.
Good health. Across the board, should I buy it?
Great question. Again, so we'd have to ask some more questions like your financial situation, your family dynamic, children, all that fun stuff. But the reality is, if you were properly protected with the basic life insurance, if your income was protected, if you're doing a good job saving money, if you're putting money away for your future, if you have some cash, it's a conversation we could start to have. I would say people are having it certainly in their mid-30s.
Okay.
But definitely once you get into your 40s, it's something that even if I don't bring it up to somebody, they're already asking me about it because they're seeing their parents now in their 60s and 70s, and they're like, wait a second.
Yeah.
Or their parents were fortunate enough to have these great policies with lifetime benefits that nobody can get anymore, and I have to be the person with the bad
What is
news.
that? I heard about that a few times. What is that no one can get anymore?
It's, there are certain carriers that used to offer long-term care policies where if you went out on claim, you got that benefit for the rest of your life.
What does that mean? Out on claim? Out on.
Meaning you qualified for the policy, right? You couldn't perform 2 out of the 6 activities of daily living.
Okay. So that's what the qualification is?
Yep. You triggered your claim. So I went to the insurance company. I said, here you go. Here's my records, whatever. I qualify. They start saying, whatever my benefit is, let's say $5,000 a month, $8,000 a month,
Right.
$10,000, doesn't matter. Let's say $10,000 for easy math. They're going to give me $10,000 a month every single month until I'm no longer here.
Right.
Now, if I trigger a claim at 68, and I'm not really that bad for whatever that means medically speaking, there's a chance they could be on the hook for 20 years.
Right.
Now, statistically, the average long-term care claim is like somewhere between 5 and 7 years, but the point is those lifetime benefits, the insurance companies just couldn't, it wasn't profitable anymore.
Right.
At the end of the day, insurance companies are there to make money, right?
Yeah, sure.
If they're paying $120,000 a year, every single year, to tens of thousands of people for 20 years, that product's going to be gone. So that's why that marketplace. Yeah, it's true, right? Now they'll honor anything they have for the most part, but that's why that product in that space has changed so much.
What's the average term on it now?
Benefit period?
Yeah.
I think the longest one I've seen recently is like 7 years, something
Oh,
of
wow.
that nature. Yeah. Now again, it does fall in line with the statistics of how long somebody lives when they've had a long-term care event, and it's a traumatic event.
So why would I buy it now if the chances of me, like why wouldn't someone just wait to buy it?
Great
like
question.
why not, oh, there's 2 out of 6 things I can't do, let me go buy some.
Would you then qualify?
I don't know, that's what I'm asking.
So a couple of things. Life insurance, disability insurance, long-term care insurance. Obviously, the younger and healthier you are, the cheaper the premiums are.
Okay.
Right? Just insurance 101, right? The younger, the healthier you are, the cheaper the. Number 2 is we don't know as we age if we'll qualify for something medically.
Right.
And number 3, as we age, there's all these other pressures and different things that we're thinking about. So now if our premiums are higher, the likelihood is we're going to keep kicking that ball down the road. And eventually we get to this point where we're now 55, we never address this, and it could be, an expense, if you will. And,
Right.
and working it into your overall financial plan and working with your cash flow can be a challenge. But again, just because you're having the conversation at 40 doesn't mean you're buying something, right? You can have a conversation with a professional and bounce ideas, and they can look at your specific situation and say, hey, Tim, you know what? I think you could punt on this for a year.
Right.
Or hey, Tim, you know what? Have you looked at a hybrid product? Right, that's becoming very popular now. A hybrid life insurance long-term care product. How does that impact Tim? So everybody really is bespoke, and I don't mean to use that as a cop out to some of the answers, but
No,
we're all so unique, right? When somebody comes to buy a house, right?
Yeah.
Do you want 4 bedrooms, 3, 2, 1 up, 1 down?
So now even if you talk to well, I don't know if you're ever going to talk to him, but if you listen to a guy like Jeff Bezos talk, he'll say that everything that is even Amazon will eventually come to an end, right? So
That's morbid, but sure.
well, everything eventually will, every business will eventually go out of business or will transfer to another or whatever. What I think is if I started a policy now, kind of to my question before, and I'm paying, X amount of dollars into this thing every month, what happens if that business goes out of business?
Are we talking about
Any policy, it doesn't matter. Long term, let's say long term, I start now, and in 40 years, I'm 74 years old, and I'm like, you know what? 2 out of 6, check. I want to check in, and then they're like, oh, we're not here anymore.
Sure. So depending on the state you live in, depending on your state insurance boards, there are rules and regulations for if companies go out of business.
Okay.
There are different arrangements where a certain percentage of the book of business from that company has to be consumed by the other carriers. So there are legal.
Oh, really?
Yeah,
Okay.
there are
so
legal.
There's like a dissolve plan.
Sort of, yeah. It's not that cut and dry. It's probably for the really smart people that have pocket protectors. I can answer that question better than I can. But there are certain contingencies. But again, that's why strength of company matters.
Right.
That's why if you want a permanent product or you want a mutual carrier that's been around for 170 years. I'm not saying they'll be here forever. Right? Guardian's been around here 162 years. Mass Mutual, same. I'm not saying they'll be here forever, but I would be confident to say, Tim, by the time you need it in 30 years, it'll probably still be around. Right. So those decisions matter. Right. And strength of company matters, and financial these companies get rated every single year by all the major rating. They come in, they want to look at their books, their reserves, they look at all of their operating expenses, their underwriting. Like people sometimes think underwriting is a nuisance, and I tell people you want a company that really looks at underwriting, because that means they're not making as many mistakes.
Right.
Meaning they're not paying as many claims, which is actually good for the policyholder. You don't want a company that's making mistakes.
Yeah, you're in the game. You have skin in the game.
Exactly. Yeah. So all those things are positive, but that's why picking the right carrier is absolutely a very important part, a very, very important part of the process.
Awesome. So from the top, someone like myself, I'll keep using myself as an example.
Okay.
34 years
We've
old.
killed him. We've taken his legs. The poor guy. Is Tim still here? Sorry.
No. So those three things are what I should be looking at, right? So you got life insurance, the type gets sorted out after, disability, and long-term care.
Yeah, I don't necessarily think you need one before the other.
Yeah.
But what I always say to people, and kind of our firm's philosophy around planning in general, is we believe in protection first. And the reason we say that is you don't get a redo button on certain things. Right? So if we have these contingencies in place, we're actually insulating the rest of our balance sheet and everything else, right? Like you're in real estate. I'm sure your goal is to have 70 million properties all over the country and just have millions of dollars in rent rolls and just sustain on that, right? Like that's the dream, right? But in order to get there, you need to be able to save money because you need down payments. You need to have good credit.
Right.
You need to have the ability to go out there and make the money.
Right.
So making sure you have the basic protections in place and just kind of checking those boxes, whether it's term insurance and some basic disability to start, then moving towards your other financial goals, that's great.
Right.
But it's like an order of operations, right? If we start focusing on the real estate and then something does go wrong and we don't have that fail-safe, the whole plan's over.
Yeah.
Right? That whole idea and that whole world that you built sounded great, but we're not able to actually go execute. So sometimes we have to take a step back to take 2 steps forward.
No, very important, man.
I try.
Very important. Yeah, we're gonna have to talk after. Anyone listening right now, if they wanted to get a hold of you, if they had questions for you, seems like a topic where a lot of questions could spiral from it. How can they reach you? Social media, phone number, whatever.
Yeah, whatever. So my direct number is 646-376-4269. My email is firstname.lastname@fhfg.com. And what I would say to people is, listen, I have conversations with people all the time. They don't necessarily become clients. Oftentimes people like yourself will come to me already having done stuff and they want a neutral review. I'm not in the business of telling you something was bad. I'm in the business of educating people. Right? You had no idea what you were eligible for. Now, I'm not saying you might not have bought however many millions of term you bought. You might have got less. You might have bought more knowing that information.
Right.
But I want to empower you or whomever to make the decision that's right for their family. I'm not here to make decisions for people's family. I want to put the gutters on. I want to put the bumpers. I want to put the bumpers on your. I want to talk you through it.
Right.
But at the end of the day, you got to roll that bowling ball down the lane, and you're going to get that strike, and we're going to help you do it. But I just want to be those bumpers. Hey, did you know this? Were you aware that this company does this really well? Did you know that this product could do this for you? Did you know you're eligible for this much insurance? Right. And usually when I talk to people in real estate like yourself, I use the house analogy. For some reason in life insurance or even disability insurance, we don't do a good job educating people on what their value is. And they come in saying, I want $1 million policy. I want a $500,000 policy. And I always go, great. And how did you come up with that number, right? And it's kind of like, oh, I don't know.
Yeah.
Or I read somewhere 10 times my income. Great. For the right person, that might be the right number. But for somebody else, maybe 20 times their income is more appropriate.
Right.
Maybe 30 times their income is more appropriate. They have young kids, their spouse doesn't work, or they have a business liability. Sure. I don't know, right? Everybody's situation is unique. So neutral pair of eyes to review, to talk through things. We're always happy to do that. There's no bad questions, and we touched on a lot of stuff today, so I'm happy to dive deeper into whatever people.
That was really good.
I appreciate it.
Awesome.
I have my moment. I've been practicing all day.
Awesome, man.
I appreciate you having me. I really do. Thank you very much.
Yeah, thanks for coming on the show.
Anytime.